In this video I'm going to show you how to spot and trade the exact top and bottom using divergences. I'm going to show you a few examples based on a paid indicator, and I'm going to compare this to two free indicators. If you like the content, please do me a favor, like, subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share this video with your friends if you think that's useful. Without further ado, let's start diving in. As I said, divergences, we have two kinds of divergences, a bullish divergence and a bearish divergence. And this is a little bit of theory for you. What is that exactly? Well, a bullish divergence is when price makes a lower low and the oscillator makes a higher low. And the bearish divergence is exactly the same upside down. Price makes a higher high and the oscillator is making a lower high. What is an easy way to remember this? You can see it as follows. Price makes a lower low, but your oscillator is actually whispering in your ear, psst, people are still selling, but actually we are going up very soon. And for the bearish divergence, exactly the same. People are still buying, but hey, psst, we're actually gonna go lower very soon. With that being said, let's now look at a few examples, and with the paid and free indicators. The paid indicator is Market Cipher, and we're then using Market Cipher B. That's the thing here at the bottom that you see with all the colors. I'm going to clean that up a little bit so that it is a little bit nicer to look at. We are going to take off the VWAP here. So this line. Yeah, I think this should do. So now you're only seeing blue waves and red and green. The blue waves are the so-called momentum waves. They show the momentum of price. And the red and green is the money flow. Is money flowing in or out of the asset. Now we're going here to an example of Bitcoin. We're here on the daily. And we're going back all the way to 2022. And this is a very special moment in the crypto history because this was the dump of FTX. And a lot of people said, oh, that was such a surprise. But I can tell you that was not a surprise if you looked at the chart and if you knew about this technique. Because price here made a higher high, as I'm showing you right now. And the oscillator, Market Cipher B, made a lower high, confirming a bearish divergence. The red and the green dot is usually then when the flip of the wave is confirmed. You can also see here confirmed red dot, and then we rolled over and price made a huge dump. Now there are two things I need to tell you. That A, you never know how much you're going to dump. I mean, in this case it was almost 30%, so that was huge. And B, these bullish and bearish divergences do not have a 100% success rate. So there are divergences that just never play out. However, the success rate on bullish and bearish divergences is extremely high, and therefore they are very reliable. So who cares if you lose 1 or 2 if you then win 8 or 9 in a row. So they can give you a tremendous win rate and great accuracy. Okay, now let's look at this exact same moment also on the MACD and the RSI, because those are the two free indicators that a lot of people use if they don't buy Market Cipher. And you can see here for the RSI on the one day, it's almost like flat. You don't really see a very clear divergence. Now let's look at the same then for the MACD. Actually, it didn't show you any divergence at all. Now I want to zoom into this exact same moment, but now on the 4 hour. And the reason why I'm showing you this is that I am usually trading bullish and bearish divergences if I see a divergence on multiple time frames. So yes, daily is big and it is powerful, and usually when you see a divergence on a daily time frame, it's a very high likelihood it will play out. But I usually like it when my divergences are backed by multiple time frames, or sometimes I only take a divergence, let's say based on the 4 hour, because we do see it there but we're not seeing it on the daily. Then I also like to see it on, let's say, the 1 hour or the 30 minute. Now here you can see it also played out here on the 4 hour. The momentum wave was making a lower low, a lower high, price was making a higher high, confirmed divergence. Let's see what the RSI did. Yes, the RSI also showed you a lower high. And let's see what the MACD did. Also this one showed you a lower high. So if you were just trading this based off the daily, you would not have a trigger to get in. If you traded this off, let's say, the 4 hour, and I'm very sure this also played out then on the 1 hour 30 minutes, very most likely you saw it. So it depends on then the time frame, and you can see here in this case for both the paid and unpaid indicators, it did play out. One quick side note I want to make: if you're interested in buying Market Cipher, I have a partner link in the description. If you click on it and eventually you buy it, I'm getting a little bit of the commission, so you would help out me and the channel. If not, then of course you can try to use still the RSI or the MACD. Here we have a moment pretty much at the bottom of the bear market, and you can see a pretty big wick to the downside on this 4 hour. Look at that, price makes a lower low, momentum wave makes a higher low. Now, in the beginning, actually it didn't give you a whole lot of reaction. This is just, what is it, 2.5–3%. I do have to say, oh no, it's not in the weekend. So there was 2.5–3%. However, if you were brave enough to keep your stop loss underneath this low, so you're getting in, let's say somewhere here, right? You have your bullish divergence confirmed, momentum wave higher, price is lower, then you're getting in, and then you would not get stopped out by this wick right here because your stop loss is underneath, so you do not make a new lower low. Then you would have been rewarded tremendously, because you can see here that this was a huge move of approximately 30% to the upside. So that would have worked out great. Now let's also see if this exact same moment also would have given you a long trigger on the RSI. Here again, super flat. It's almost an equal low. So this one is very ugly. And let's look at what the MACD said at the moment. Yes, but also you can see here that both of the lines are pretty close to each other. That MACD and signal line, this is ugly, but yeah, I mean, yes, it did give you a higher low here on the MACD, but not so clear. Where here for Market Cipher B, it is a very clear trigger to get into the price. Let's zoom into another time frame, because I have a few also examples for you that are very nice and maybe not so clean to get into, to trade, or to understand. This is actually a pretty nice moment. Just trying to have a feel here for the structure. You can see the price is just constantly making lower highs, lower lows, and eventually the price is grinding lower, 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 and everyone is shorting this until you finally see your bullish divergence here on price and Market Cipher B, because price here makes a lower low, and you can see here that Market Cipher B is making a higher low. Matter of fact, you even have 3 waves. That is super juicy. Let's see what the RSI and the MACD did. Yeah, you also had a confirmation here. This actually was super clean and super clear, was so obvious. Here on the MACD, a little bit, but not as much as you maybe would have wanted to see, not as clean as the RSI. By the way, if you're not using Market Cipher, I do not prefer the MACD over the RSI. I feel like the camp really is 50-50. Some people use the MACD, some people use the RSI, whatever you feel like. I'm always using Market Cipher B, again, because it is so much more clean and so much more clear to spot these divergences and to trade them. With that also being said, because market structure here was so incredibly bearish, it was just an absolute long squeeze to the upside. If you would have gotten out somewhere here in the middle, it was a plus 22%. So that's a major risk reward here on this bullish divergence. Great example. Now let me see what else I have for you. I have to mark somewhere on the chart. Need to look them up real quick. Okay, great. This was pretty hard actually to trade. It did work out nonetheless. So here you have a very big bullish divergence, in the sense that from one moment to the other, it is a pretty big time lapse. So this is 31 days. Personally, based on the 4 hour, I would not trade this on 31 days. That gap for me is too big, and I have an example for you later on, again, why I would not trade that. But you can see that you had a bullish divergence ever so slightly. However, if I would take this exact same moment, but I'm looking at the 1 day, then I need to go here. There you can see that this actually was super clean and super clear. Here you have your momentum wave making a higher low, and your price is making a lower low, very much confirmed. The green dot came a little bit later, and then eventually you see the price moves higher. So this initial move up right here would have been 18%, or maybe you take already some profit here if you would have kept the trade, because also here you can see the low has never been taken out. You can have this right out to 30, 40, 50%, whatever, then eventually you go out. Super nice trade. Here I have another great example which can be very confusing, and this is trading. Sometimes it's not always this easy, it's not always this clean, but I will explain to you why I would take one over the other. So we have here a bullish and a bearish divergence at the exact same time. We're having a higher high here on price, as you can see, and we have here a lower low on price. So in other words, we have here a bullish divergence on this, let's say these lows that are close to each other, and we have a bearish divergence of the waves that are far away from each other. Now, personally, I would not trade this bigger bearish divergence, and the reason is because the time between these tops is very wide. Also here you can see 9 days. I like it when I see the divergence in a span of, let's say, approximately 5, 10, maybe 15 candles. That is really what I like. So here the bottom actually is super nice because the lows are relatively close to each other, and you have that clean bullish divergence, where here it is a little bit iffy because market structure is still up. If you also zoom out, you can see that over the trend over the last couple months, you can see that price is slowly grinding higher. So taking this bearish divergence here when you also just created a bullish divergence, for me is very, very tricky. Personally, I would not take the trade, but here you can see in one shot you have a bullish and bearish divergence. It can throw you off, but like I said, I wouldn't take it because of the time lapse, and also because the market structure is still very much bullish. Then, before I'm going to the other one, I still need to show you what did the RSI and the MACD do at that exact same moment. Well, the RSI did give you a trigger to get in. Look at this, very beautiful actually. Here on the low end here, you can see that gave you a bullish divergence. And actually, yes, this also gave you a bearish divergence. So also here, confusion on the RSI. Now let's see what the MACD did at this moment. Not so clean, not so clear once again. I can barely see actually if this is a bullish divergence, and this is not a bearish divergence because you can see here that the waves, one wave is higher than the other. So yeah, actually you don't want to see that. This blue line and orange line, the MACD line and signal line, they need to be lower. So MACD was not only unclear but also did not give you a clear bearish divergence. The RSI was slightly better but still actually not as clean. Only the bottom here was perfect, really, really great. But again, you can see the difference with market Cipher B, how clean that is here on the indicator. Then last but not least, and this is the last example that I'm going to give you, and that is a bearish divergence that we are in right now on the daily time frame. Super, super big. And I'm also wondering how far this will play out, but you can see here that one high is higher than the other. So again, price makes a higher high, and the momentum wave right here makes a lower high. And so also here you have a confirmed bearish divergence. And the reason why I always kept the money flow in is because what I really like is on this indicator, if the money flow is also pouring out, if it goes into the red, because it is an extra confirmation that money is leaving the space, and that price will most likely go down. Well, now we are already 22 days further. Momentum wave is still not really clipping, and I'm not really convinced about this. So we could still see a major dump, and then everyone would say, well, look at that, the bearish divergence still played out. But this is also something that can happen while you're trading, is that you can see this bearish divergence completely confirmed, and sometimes it takes a very, very long time to play out. So then it's just a matter of using proper risk management, moving your stop loss, taking profit along the way. If you still get that major dump, yippee-ki-yay. If not, it is what it is. But this is also a great example of how sometimes it can take a long time and it plays out on a bigger time frame. I hope that this was clear. If it was not, please do me a favor and just drop your questions or comments in the comment section. And when you're down there anyways, also feel free to like, to share, and to see you guys very, very soon again in the next one. Bye bye.